915.7R. That is what one of our candidates printed in the shadow book. Run the same trades through a real $100 account, and you get plus 38%. Not slippage. The account could only take 84 of the 438 signals. The other 354 arrived while the money was already busy. Case 6. Quant Court is in session. Today the defendant is not a strategy. It is the unit we measure them with, the R multiple. R is risk. 1R is what you lose when the stop is hit. Sum the R and you get a clean number that works across symbols and across price levels. Every backtest on this channel used it. It is a good ruler. It is also blind to the only thing that pays your bills. In case 4, we built exact trading costs and 10 strategies died on the spot. This time the costs are fine. The problem is the account. 3 candidates measured, 438 signals found and 84 taken. 995 found, 338 taken. 690 found, 58 taken. The strategy was never wrong. The account was simply not there when the signal was. 4 walls do this. Open positions share one deposit. Leverage is capped on the whole account, not per trade. Margin runs out while an earlier position is still open. And an order below the exchange minimum is refused, which bites hardest right after a drawdown when your size is already small. The lens cuts both ways and one defendant survived it. Our prop candidate went from $5,000 to $11,514 over the same window, with a 4.3% drawdown, and it never breached a daily or a total limit. Same rules, same walls. One account grew, 3 could not. Now the part that cost us the most. We wrote a simulator to answer this question, and the simulator was wrong 4 times. Every wrong version produced a believable number. That is what makes this kind of error expensive. Error 1. We multiplied the balance by each trade in sequence, the way a compounding curve is usually drawn, but trades overlap. Positions that ran side by side were charged as if they had queued politely. The result was $56,638, where the honest answer was $187. Error 2. We checked leverage per position. Each one passed the 10 times limit on its own. Together they did not. Leverage belongs to the account, and 5 compliant trades add up to 1 non-compliant account. Error 3 is the one we already convicted ourselves of. In case 5, we caught our own backtest reading the future. Here it happened again in one line. When 2 signals wanted the last free margin, our code gave it to the trade that closed first. Closing time is information from the future. We were handing the slot to the winner. That line have the result. 54.86 against 130.07. Error 4. We used the raw maximum adverse excursion as floating drawdown, and it wiped out a prop account that the real rules never touched. So we checked the column. Values above 1R appear in exactly 469 trades, and all 469 of them are stop outs. It was never floating loss. It was the stop, already taken. The rebuilt version is boring, and that is the point. Risk is fixed the moment the position opens, not the moment it closes. Leverage is measured on the account. We never occupy more than half the free margin, never more than 7 positions at once. The deposit is recomputed after every single trade. Then a new question appeared. When the slot is the last one, which signal gets it? We tested it on common random numbers, 200 replications. The winner is value density, planned reward to risk, minus cost in R, multiplied by stop distance. Plus $7.53, T of 23.09. It beats both of its own ingredients taken alone. One more thing to check in your own numbers tonight. Our limit orders fill with a bias. Planned reward to risk across all signals has a median of 2. Across the ones that actually filled, 0.83. Sort by target distance and it gets worse. Under 1 fills 31% of the time. Between 1 and 1.5 it is 12%. Above 1.5 it is 0. The far targets never fill because price has to travel further just to reach your entry. So tonight, open your own backtest and count two numbers: how many signals it found and how many your account could actually have taken. Verdict: R is not money, and a strategy your account cannot fund is not a strategy. Ours took 84 out of 438. Here is where the search stands tonight. 45 strategies tried by name in this court. 3 acquitted. 1 is under examination right now, and it has passed one of its 13 gates. Recipes published: 0, and that number will not change because an edge printed in full stops being an edge. We are not promising you a profitable strategy. We are showing you the search, and the odds are roughly 1 in 14. Case 7 opens next week. The defendant that survived 10 trials and might pay our bills. We wrote down in advance that it cannot win on history.